Today, we're going to play detective. We're going to decode a whole series of clues coming from both the market and from Washington that all seem to be pointing in one very specific direction. A massive, politically motivated stimulus aimed squarely at the stock market. So let's break down the evidence.
It all really boils down to this one question. Are we seeing a secret plan unfold to pump up the stock market? The signs, well, they're definitely there, if you know where to look. And the potential scale of this whole thing, it is absolutely staggering.
We're talking about a potential $15 trillion effect on the economy. Yeah, you heard that right. That is the insane amount of wealth that could be unlocked and sent coursing through the system. But how could that even be possible? Well, to understand what might be coming, we first have to look back. See, this isn't the first time we've seen signals like these. There's actually a really clear precedent from back in 2019 that shows how certain actions can line up perfectly with major moves in the market. Okay, so take a look at this timeline. On April 9th, 2019, a tweet comes out saying it's a great time to buy stocks, right when the market was feeling shaky about tariff threats. Then, just a month later, another signal gives the all-clear on trade deals, and the result? A massive rally. The S&P 500 finished that year up 36%, and the Nasdaq was up a whopping 50%. And this really highlights a key point from the source analysis. This isn't about politics. It's about recognizing when a powerful figure measures their own success, at least in part, by how well the stock market is doing. This little history lesson from 2019 really sets the stage for what we might be seeing right now. So, what's the main catalyst this time around? Well, according to this theory, it's not some complex new law. It's actually something much, much closer to home for millions of Americans, the housing market. So get this. Right now, U.S. homeowners are sitting on $35 trillion in home equity. And just in the last 5 years, the value of their homes has shot up by $15 trillion. But here's the problem. That wealth is completely locked up. It's stuck. And here's why. It's the homeowner's dilemma. Over half of all mortgages in the U.S. were locked in at these incredibly low rates, like 4% or even lower. So nobody in their right mind wants to sell their home or take out a new loan if it means trading that sweet low rate for today's rates of 6% or higher. The math just doesn't work. This chart just shows you how crazy the imbalance is. Homeowners have gained $15 trillion in equity. That's the massive bar on the left. But only a tiny, tiny fraction of that, just $277 billion, has actually been accessed. That huge locked bar is the target. So the big question is, how do you unlock it? Well, according to this analysis, it's a simple 3-step plan. First, you appoint a new Fed chair who's more aggressive about lowering rates. Second, you have the Fed start buying up hundreds of billions in mortgage bonds, which directly forces mortgage rates down. And the goal of all this is to hit one very specific number. And that number is 5.5%. Yep, research suggests that this is the magic number, the tipping point. If mortgage rates can get down to 5.5%, homeowners would suddenly have a real reason to move, to refinance, to tap into all that equity, and that could potentially unleash trillions of dollars in spending and investment into the economy. By the way, if you're finding this breakdown helpful, do me a quick favor and hit that like button and subscribe to the Stock Market Mojo YouTube channel. It really helps us keep digging into complex topics just like this one. All right, so unlocking the housing market. That's the biggest piece of this puzzle, but it's not the only one. There are other government levers being pulled that seem to back up the same exact theory. So let's run through 4 more clues. First, retroactive tax changes are apparently set to make 2025 tax refunds the largest ever, putting more cash right into people's pockets. Second, there's this new Stablecoin Act. It basically forces companies that issue stablecoins to buy U.S. bonds, which helps push interest rates lower. Third, the government is taking direct multi-billion-dollar stakes in public companies like Intel. And fourth, a new kids investment program is literally funneling bonus money directly into the S&P 500. Now, each of these on its own is pretty significant, but when you look at them all together, they start to form a really compelling pattern. So, the big question for all of us is, what does this actually mean for your portfolio? Well, the analysis points to 3 key investment themes that could really benefit from this kind of environment. First up is cybersecurity. This is still a must-own long-term growth theme, no question. You could look at an ETF like CIBR to get broad exposure, which includes industry leaders like Palo Alto Networks, CrowdStrike, and Zscaler. Second, you guessed it, artificial intelligence. The focus here is on the AI supply chain. the companies that are building the essential hardware. We're talking about names like Broadcom for accelerators, of course NVIDIA for GPUs, and Supermicrocomputer for servers. These are the companies selling the picks and shovels in the AI gold rush. And the third theme is rare earths and strategic metals. With this huge push for domestic supply chains, US-based companies are in a great spot. The analysis points to an ETF like REMX, and it specifically calls out US companies like Albemarle and MP Materials, which, by the way, has already gotten direct government investment. So we have the mechanism, we have the supporting actions, and we have the potential impact on the market. But what's the real motivation here? What's the ultimate catalyst driving all of this? Well, the analysis points to one major event on the calendar. And the alleged goal is really simple. Have the economy absolutely booming and the stock market surging by the time the November midterm elections roll around. I mean, a strong market and a feeling of wealth can be a pretty powerful political tool. And that brings us to the core thesis of this whole thing. When you start connecting the dots, influencing the Fed, changing tax policy, buying up mortgage bonds, making direct investments, they stop looking like random, isolated events. Instead, they start to look like a coordinated effort with a single, clear goal in mind. Which, of course, leaves us with the final question. We've laid out all the clues and the historical precedent. So is what we're seeing just a series of happy coincidences? Or is the market truly being primed for a massive, politically motivated rally? That is for you to decide. To keep getting these clear, visual breakdowns of the big forces moving the markets, make sure you subscribe to the Stock Market Mojo YouTube channel. Thanks for watching.